Hey everyone, it's Alicia Stearman with Cross Country Mortgage, your local residential loan officer, and I'm excited to share with you today about capital gains tax in 2021. So first, let's talk about what is capital gains tax, okay? So capital gains tax is a tax on the growth and value of an investment which occurs when an individual or corporation sells that investment. When it is sold, the gains can be referred to as a realized gain, which is when it's sold at a higher price than you bought it for, or a realized loss, which means you sold it at a price lower than what you paid for it. Okay, so the gain is either going to be a realized gain or a realized loss. And then an unrealized capital gain, it's a theoretical profit that exists on paper resulting from an investment that has not yet been sold. So basically, if I bought some stocks, it went up in value, but I never actually sold it, that is an unrealized gain. It's there, but only if I sell it. It can go away. Stocks can go down. The value can go away, okay? But it is not realized until the day I actually sell that stock, okay? So stock shares that appreciate every year will not incur capital gains until they are sold. So your stocks can go up in value and you're never actually going to have to pay the capital gains tax until you sell that stock, okay? So if an investment is held for longer than 1 year, then the profit is taxed at the capital gains rate. If it's less than 1 year, it's considered a short-term gain and it's a much, much higher tax rate. It's actually going to be more based on your income itself, okay? So whatever your income tax bracket is. So an unrealized loss is the opposite of an unrealized gain. And so basically same thing, I bought a stock. If it went down in value, it becomes a loss. If it goes up in value, it becomes a gain. And the reason this is important is if you lost money that year and you gained money that year, they can be used to offset, but again, only if you sell the stock, okay? So U.S. capital gains tax only applies to profits from the sale that's held for more than a year. Capital assets subjected to this tax are including stocks, bonds, precious metals, jewelry, and real estate, okay? Long-term capital gains are taxed according to graduated thresholds. What does that mean? It's basically based on your income bracket. Okay, so tax rate on most taxpayers who report is 15%, but it can go up to 20%, the capital gains tax. If the short-term gain, which is again, if you sell it under 1 year, it could be as high as 37%. Again, it's based on your tax bracket, so it's important to know. So I'm going to include the chart here because I want you to really see the numbers. If you're subjected to capital gains, okay, so let's say you bought a rental property. It went up in value, some emergency happened, and you have to sell it now. Great. The capital gains tax rate is 0% if the taxable income of the person is up to $40,000. If they're married filing joint, it's up to $80,000, okay? If it's 15% cost if your income is $40,000 to $450,000, so it's a big jump. And it goes up to 20% if the gain and your income combined is over $445,000 as single or $500,000. So there is some potential tax in there, and it's substantial if the gain is over $500,000. As an example, married filing joint, you could be paying up to 20%. So where there is an exemption, and this is where it applies to a lot of us who sold our primary residence, right? Basically, the exemption is on your primary residence. If I sold my primary residence after 2 years of living there, if I live there 2 out of 5 years, I have a $250,000 per person exemption. So when you're married, it's $500,000. When you're single, it's $250,000. Okay, so I can make up to that profit and not pay taxes as long as I stay in the home for 2 years. If it's under 2 years, then it's different and it's counted as a short-term tax, which can be, again, up to 37%. So it's quite a bit cheaper if you can hold on to that home for over the 2-year period of time. If it is a rental property, you're subjected. You only have that exemption on primary residence, okay? So hopefully this tip was helpful. If you want more mortgage money tips, please like, follow, and share this YouTube channel so you or anyone you know that's looking to purchase a home can be included in all this updated awesome information. All right, well, I hope you guys have a wonderful rest of your day, and I look forward to talking to you soon. Bye-bye.